Hello everyone, and welcome back to Explain the Charts. In today's video, we're doing an in-depth analysis of Meta Platforms, ticker Meta, for Friday, October 3rd, 2025. It's been a volatile few days for the stock, which has seen significant selling pressure despite the broader market showing some strength. We're going to unpack the critical news driving this price action and then dive deep into the charts to see what they're telling us. First, the news. Meta stock is currently trading around the $715 mark, down significantly from its recent highs. A primary catalyst for this weakness appears to be the recent announcement of OpenAI's new AI model, Sora 2, which is being touted as an exceptionally powerful video generation tool. The concern for investors is that this could make competitors like ChatGPT even more attractive, potentially siphoning user attention away from Meta's platforms. This could put a dent in Meta's own very expensive AI ambitions. However, Meta is fighting back with its own powerful AI initiatives. The company announced it will soon target advertisements based on user conversations with its AI chatbots, a move that could unlock massive new revenue streams. This is a core part of Mark Zuckerberg's plan to see a return on the billions being invested in AI infrastructure. So we have a classic battle between a bearish competitive threat and a bullish internal growth story. Adding to the uncertainty is the broader market, which is torn between AI-driven optimism and concerns over a government shutdown and mixed labor market data. We also can't ignore Meta's rock-solid fundamentals. Recent reports from Forbes highlighted the company's strong Q2 earnings beat and its incredible $178 billion return to shareholders over the last decade through dividends and buybacks, showing immense management confidence. With all that in mind, let's see how this complex narrative is reflected in the price action on the charts. Starting with the daily chart for the big picture, we can see the strong uptrend Meta has been in for the better part of the last year. The stock made a spectacular run from its lows, culminating in an all-time high of $796.25, which was hit back in mid-August. Since that peak, however, we have seen a clear and sustained pullback of roughly 10%. This correction aligns well with the timing of the recent news about increased competition in the AI space. The price is now testing a critical area of potential support. Looking left on the chart, we can see a support zone formed by the lows of late September around the $710 to $720 range. If this level were to break, the next major support area to watch is down around the $680 to $700 zone. This area is significant because it corresponds with the consolidation we saw back in June and July of this year. It is also located near the bottom of the massive earnings gap up from late July, and such gaps often provide very strong support when retested. Therefore, a drop to that level would likely attract significant buying interest. Now, let's zoom in on the price action since that August peak to get a better feel for the current trend. On this focused view, you can clearly see the pattern of lower highs and lower lows that has formed over the past 2 months. This is the technical definition of a short-term downtrend. We did see a notable bounce in early September, but it failed to take out the previous highs, finding stiff resistance around the $780 level. That failure was a classic bearish signal, confirming that sellers were still in control of the trend. The subsequent sell-off has been sharp and has brought us right down to the critical support levels we're watching now. Switching over to the 1-hour chart gives us a more granular view of the battle raging over the past few days. Here, we can see the sharp gap down on October 1st, which was very likely a direct market reaction to the OpenAI news we discussed earlier. The price fell from above $734 to near $721 in a single, powerful session. It's important to note that the volume on this drop was significant, which gives the move more weight. Since that sharp decline, the price has been consolidating mostly sideways. It is clearly struggling to reclaim the area between $727 and $730. This price zone is now acting as immediate short-term resistance. A definitive failure to break above this level would be another sign of continued weakness for the stock. Drilling down even further to the 15-minute chart shows today's intraday story. We saw an initial dip at the market open, testing the recent lows around the $718 level. However, buyers did step in there, pushing the price gradually back up throughout the session. Interestingly, that upward momentum stalled outright around the previous day's closing price of $727. This price action shows clear indecision in the market at this very moment. Traders are essentially waiting for a decisive break one way or the other from this tight consolidation range. So, to bring everything together and recap, the situation with Meta is complex and multifaceted. Fundamentally, you have a strong, cash-rich company with a new plan for AI monetization. But that is clashing with a major new competitive threat from OpenAI and broader macroeconomic headwinds. This conflict is what is creating the tense, volatile price action we are seeing on the charts. The key price levels to watch are absolutely critical at this juncture. To the upside, immediate resistance is at the $727 to $730 zone, followed by a stronger resistance area around $750, with the ultimate ceiling at the all-time high of $796. To the downside, the first line of defense is the recent low around $710. A break below that level opens the door for a potential test of the major support zone down at $680 to $700. Now for some potential scenarios based on this data. For the bullish case to play out, we need to see the price decisively reclaim and hold above the $730 resistance level. If that happens, it could signal that this pullback is complete and trigger a move back towards the $750 area. In the short term, I would place about a 40% probability on this scenario. A wave of positive market sentiment or a major reassuring announcement from Meta would reinforce this view. The bearish case is a firm break below the $710 support level. This would confirm the downtrend is still in force and would likely lead to a test of that $680 to $700 zone. Given the current downward momentum and the negative headlines, I see this as the slightly more likely short-term scenario, with about a 60% probability. A sell-off in the broader market would greatly increase the odds of this happening. Looking ahead, the next earnings report for Meta will be absolutely monumental. It will give investors the first real data on the performance of their new AI advertising initiatives. Also, keep a very close eye on any new product announcements or developments from both Meta and its competitors like OpenAI, as this AI arms race is directly impacting the stock price. Finally, a quick disclaimer. This video is for informational and educational purposes only and should not be considered financial advice. All investing involves significant risk, and you should always conduct your own thorough research and consult with a qualified financial advisor before making any investment decisions. Thank you for watching Explain the Charts, and don't forget to like this video and subscribe for more in-depth analysis.